Good evening, everybody. Hope everybody's having a pleasant, yes, still winterish type evening. Tonight, we've got a very timely topic. We've got the great pleasure of having Jerry Allison with us. He's been a CPA for over 30 years. He's got a doctorate in business administration and a master's in mathematics. He's also taught at universities for setting up efficient or businesses efficiently. And tonight his topic is how to use some effective tax strategies for an investor. So with that, Jerry, welcome to the Candlestick Forum. We're anxious to see your information tonight.
Thank you very much. I appreciate being here, and it's a pleasure to be with you all, and hopefully you all are learning a lot in this conference. So without further ado, I am Jerry Allison. I'm a CPA with Traders Accounting, and we specialize in helping traders do their taxes and save money from the tax preparation. And so tonight we're going to be looking at trader tax status versus investor status, and what they mean to you as far as your tax bill. Now, in this presentation, I'm going to go through several things here, but we'll go through the presentation first, and at the end, we'll leave a little bit of time open for some question and answer. Now, what do I plan to cover tonight? First of all, is trader tax status versus investor status. And basically, we're going to cover deducting your expenses on your trading expenses on your tax return. Second of all, we're going to cover entities, what it means to form an entity and trade out of an entity, and possibly which entity is right for you. And we'll talk about that a little bit. And then finally, we'll talk about the mark-to-market election and what that means, because a lot of people get trader tax status and the mark-to-market election confused. So without further ado, let's go ahead and go here. But we've got to get rid of the legal stuff first. So our disclaimer here is, to the best of our knowledge, the information given in this webinar is accurate at the date of the webinar. Tax changes happen constantly. So before you use any of this information, please consult a tax professional. Matter of fact, there were some changes here to some things that we had to update. Matter of fact, our entire knowledge database had to be reflected of some changes recently. And it was just made by the IRS commissioner. It wasn't even made by Congress. So this is something, things do change in how they have to be done. The seminar does not establish a professional or confidential relationship between you, myself, Jerry Allison, or Traders Accounting. And Traders Accounting is not a law firm, so the advice here should not be construed as legal advice. Now, a couple things before we really get into the meat of this thing, our contact information. We have a special web link for you all tonight. As a matter of fact, I'm going to put it in chat here. This web link is very special. It's geared for you all, and I'm going to mention it here at the end, but we have a special free ebook for you all to get. It's not a novel, but it is a book that's got some very important information in it. Certainly you can call us at 1-800-938-9513. And our email is learn@tradersaccounting.com. All right, let's go ahead and get into this thing. As he mentioned a little bit ago, I used to teach in a university environment. And I would teach graduates and undergraduate students. And I would class and say, what's the most important thing for a business? And someone would raise their hand and they would say sales. I'd say, well, sales are important, but it's not the most important thing. You as traders actually don't do sales. You're not selling anything. You're actually just trading stocks or equities. Open it up a little bit. So you're trading things for a gain. You're not selling anything per se. And some people would say, well, you got to have customers. Well, that's important, but that's not the most important thing. Because you all as traders can be successful, but you don't have customers. So some people would mention other things along the way. But the most important thing for any business, regardless of what it is this. It's cash flow. Without cash flow, You cannot run a business. Businesses that do not have cash flow, their books can look great. Matter of fact, some of you know about analyzing financial statements. And you know the income statement or the profit and loss statement can look fantastic. You can make it look great, but if they're not pulling in the money from the receivables, it's a dying business. And any business that does not have cash coming in, that business is going to starve to death. Now, why am I talking about this with you guys? Well, because the concentration here in this presentation is not upon just file this as your tax return or deduct this, but I want you to get a mindset here of actually when you to make a decision on something, how does this affect my cash flow? You guys already do this. When you go and you do trading, you want to find out the best possible way of trading something to increase your cash flow. Well, I want you to think of the same thing for your business, for taxes, and for other expenses as well. It's very important that your business maintain cash flow. And it's not just that getting cash to come in, but not just that, but to protect your cash flow. Protecting cash flow is extremely important as well. I've seen businesses that with cash flow, they got a great cash flow coming in, but they're leaking cash all over the place. It's going everywhere. And so you have to protect the cash flow either through taxes or watching your expenses as well to make sure that you are doing the best possible thing for your trading business. So, one of the ways of protecting your cash flow and keeping cash from going out of your business is trader tax status, or some people just call it trader status. Now, this is something that the IRS talks about in publication 550, and what it does, it allows a trader to deduct expenses from a tax return as a business. Now, how is that important? Well, if you're deducting the expenses on your tax return, that means you're not having to pay tax on that amount. And so when you get refunds, that is cash saved, or it could be cash considered cash inflow, and you can take that cash and you can put it back into investing. So trader tax status is extremely important for keeping cash inside of your business so that you can reinvest it. Excuse me. So why is this important? Well, as I've mentioned, let's look at an example here. Suppose a trader with trader tax status deducts a $5,000 training course. So you guys take training courses, you pay for them, why not deduct them? If this trader is in the 32% tax bracket, and that's federal, we're not talking state anywhere, the trader just increased their cash flow by $1,600 over a trader without TTS. So what happens is they took this $5,000 training course, and by deducting it, they get $1,600 back that they can use in investing. So they actually only paid $3,400 for the course, save some money, and so they can reinvest that money. Now, don't fall into a trap that a lot of investors fall into. It's very unwise to spend money just to get a tax deduction. We want to deduct everything that we have to, or we can. If you've got a legitimate expense that you have to make, then by all means, let's get it deducted. But don't go out and spend money just to get a tax deduction. I had a client several years ago. He's a mechanic. He owned his own business, and he came up to me in December of that year, and he said, you know, I really need a tax deduction, so I'm going to go out and spend $20,000 on this machine for my business. I looked at him and said, okay, do you really need the machine? And he said, no, not really. I said, how often would you use it? He said, maybe 2 or 3 times a year. And I looked at him and I said, you're going to spend $20,000 to get a $6,000 tax deduction. Well, yeah, I don't want the money going to the IRS. I looked at it and I said, you're losing $14,000 here. You're not going to get any income back on it. You're not going to give the IRS $6,000 and lose your $14,000 yourself. And I said, that doesn't make any sense. And the point I'm trying to make here is everything you spend in your business, whether it's taxes, forming an entity, whatever it is, it had better pay for itself in the long run. Everything you buy, everything you do should pay for itself. And so you have those returns coming back to you. All right, well, what are the qualifications for trader tax status? Well, IRS Publication 550 tells us 3 different publications where you can start deducting expenses on your tax return. And this is the exact wording from this publication. First of all, you have to seek profit from daily market movements in the prices of securities or commodities. Okay. Secondly, your activity must be substantial. Now, if you're starting to get a little bit concerned about this, you should be, because this is about the way the IRS works things. Number 3, you must carry on the activity with continuity and regularity. Well, what does all this stuff mean? This is very vague. So what we have to do is we have to actually look at this stuff in the light of court cases. And so because these things are extremely vague, and it's very often Congress writes this stuff or the IRS comes up with this stuff, we have to find out what the real qualifications are. And what happens is these people take this stuff to court. And so we have to look to the court cases for this. So first of all, here's the first qualification that we find, our court cases summary, if you will. In Endicott versus Commissioner, they found that the holding period of the securities that you're buying has to be less than 31 days. In other words, you're holding things for a very short term. Now, that doesn't mean you can't have long-term assets, long-term holdings at all. But most of what you're doing is short-term. Okay, qualification number 1. Qualification number 2. Trading occurs 75 to 80% of the trading days per year. Now, there's two different qualifications here. 1, that means about a couple hundred days out of the year you need to be trading actively. You need to be doing something in the market. So Poppy versus Commissioner, Poppy sued the IRS and said, listen, I'm making all these trades. And the court came back and said, yeah, you are very actively engaged in your business. And so it really works out to about 700 trades per year and about 500 hours of trading activity. Now that breaks down usually to about 4 trades a day and 4 to 6 hours a day doing trading and research. Research counts as well. So that is one of the qualifications that we ask people if they have to meet trader tax status. And finally, in K versus Commissioner, the intent was to make a living, either solely as a trader or supplementary to other income. Now really the idea behind all this is the IRS wants you to treat this as a business. So for example, if you're a diner and you're going to serve lunch to people, if you're really going to get into that, you would be open every day of the week. You'd be regular with your hours. You'd open up at the same time. You'd close at the same time. You'd make sure everything is done right. You wouldn't take many vacations. You might leave the diner maybe a week or so in the hands of somebody else. But you're not going to take long periods of vacation. And that's what the IRS is looking for. The IRS is looking for you treating this like a business. So if you're going to deduct your expenses on your tax return, you've got to be treating this like a legitimate business that you're going to live off of. So now it's difficult also to have a full-time job and do this, but yes, you have to be treating this like a full-time business almost. And that's one of the downfalls of this in order to deduct those expenses. So the best proof of this, frankly, is your 1099-B and your monthly statements from your broker, because using those, you can show that your holdings have been less than 30 days, or 31 days, sorry. You can show how often you've been trading. You can show these things that you put your time into this and a lot of trading effort. Now, using the 1099-Bs and your statements, you can't show that your intent is to make a living, but you can show your level of activity quite well. All right. Now, what trader tax does is allows you to preserve your cash flow by getting deductions on your tax return. So we take anything that we save and we move it back into trading. So we're preserving cash flow. So are there additional ways to increase cash flow or preserve our cash flow? Well, another way is to form a trading business, usually an LLC, where the trading and income expenses can be reported. Now, why is this preservation of cash? Well, while there's a fee for the LLC, and almost every state I know charges a fee for setting up the LLC, and then most states charge a fee to keep it up every year. But the key to this is the IRS is less likely to scrutinize a legitimately formed business where trader tax status is not as much of an issue. So the idea here is while the LLC fee is actually a decrease in cash flow, it's actually kind of like insurance to keep the IRS off your back. You're kind of buying a way to be less scrutinized from the IRS. And the cost of IRS scrutiny can far exceed the cost of maintaining an LLC. I talked to somebody today, and matter of fact, I was on the phone with them, and they said, well, you know, I keep my returns pretty clean, and I can stand I can withhold an audit. And I said, yeah, you probably can. You can understand, or you can withstand an audit, and they could probably find nothing wrong with your return. But can you afford 10 to 20 hours to prove yourself innocent? Because that time that you lose, basically, you lose, time is money, as you guys know. So once you lose that time, you lose money. So you do not want the IRS scrutiny there. And so by getting things off of your personal tax return into what I call an off tax return business, then you can actually kind of get rid of the IRS scrutiny to some extent. So what type of an LLC should you form? Well, there's many ways an LLC can be formed. There's two types. There's a single member and a multiple member LLC. Now, the fee's generally the same depending on the state. They're fairly easy to set up. You just go through your Secretary of State office. The question is, which one should you form? Well, let's talk about each one. A single member LLC, also a sole proprietorship, is generally taxed on a Schedule C of the personal return. So on your 1040 that you file every year, there's a place, even though you may not be filing it, for your Schedule C. By the way, this is where the expenses would be deducted if you're an individual trader. So on the Schedule C, you either have a sole proprietorship or an LLC, a single member LLC, you deduct the expenses on your Schedule C. But a single member LLC can also elect to be taxed as an S corporation or a C corporation. Now, that doesn't mean it's not an LLC anymore. It's just an election of how to be taxed. Now, a multiple member LLC is generally taxed as a partnership. So you need two or more people there, or two or more entities. Let's put it that way. You can have a person and a trust. There's multiple ways of doing that. But it also can elect to be taxed as an S corporation or a C corporation. Now, let's kind of go back. The single member LLC has expenses. You take your expenses on the Schedule C of your personal return. A multiple member LLC is a partnership that files a separate tax return from your own tax return. And so it's off your tax return. It's a partnership return. Now, it still flows through to your personal return, but it's off of your tax return, and so it doesn't come under IRS scrutiny as much. And you can also elect the S corporation or C corporation status. But this is the key right here. The number one most audited business is a single member LLC or Schedule C. And the reason for that is people have abused the Schedule C over the last several decades. They've written off expenses that were hobby expenses. They've written off expenses that were not legitimate. They've tried to depreciate fancy cars or boats or airplanes or whatever. And so This has become the most scrutinized thing by the IRS. So my point here is if you form a single member LLC or you just set up your sole proprietorship and use trade or tax status to deduct your expenses, it's like putting a target on your back. The IRS eventually will audit you. C Corps and now S Corps and C Corps, you can set those up straight away or you can go the LLC route as I mentioned. Both of those require officers to be paid a salary. Now, I mentioned here it increases your taxes and decreases your cash flow. When you take a salary, you have to have things like FICA deductions out of there. You have to pay unemployment taxes. You got to do withholding. So now you've got a payroll tax company if you don't know how to do payroll. You've got FICA taxes that have to be paid. You got unemployment. So now you've got all kinds of stuff related to payroll. Now, are there situations where you want to use an S Corp or C Corp? Sure. And certainly we can talk to you about that at another time. But just in and of itself, if you have a simple trading business, S Corps and C Corps are not necessarily the way to go at the beginning. Generally, what we recommend to our clients to begin with is, depending on the situation again, we usually recommend forming a multi-member LLC to be taxed as a partnership. Now, why is this important? One, a multi-member LLC, we get it off your personal tax return, and so there's not as much scrutiny from the IRS. Two, trade or tax status is not nearly as big of a thing, so you don't have to worry about it so much. And three, the taxes still go to your personal return. It's a pass-through entity, so you don't pay income tax with the partnership. It still goes through to your personal return. And multi-member LLCs are extremely flexible. You can pull money out at any time tax-free because you're taxed on the gains or losses that you get. So, having said that, what it does is basically it creates a trading business where expenses can be deducted because you've got a business already set up, and you can deduct those expenses automatically and they will flow through to your personal tax return. The Schedule C is eliminated from your personal return, reducing your audit risk. So that audit target that I mentioned a little bit ago, now is gone because you've got this multi-member LLC. And the partners can still claim their share of income on their personal returns as a share of a legitimate business. Now, some people say, well, I'm single and I don't have a partner. Well, there's a lot of ways around that. We actually, a lot of our clients, they're 99% owners of a partnership and there's a 1% family trust. Some people have decided to be a 99% owner and have a parent or a sibling be a 1% owner. In other cases, we've had 99% owners and then somebody sets up a single member LLC as well to be the second partner in the multiple member. Now we're starting to get into really complicated stuff here. But there's a lot of different ways of actually doing that. Somebody just mentioned about a spouse. Yes, your spouse and you make a partnership. We have a lot of couples that actually go in as spouses, or go in their partnership. Spouses work great if you're married. So it's very important here that this is what we recommend. Now, it's not right for everybody, but this is what we recommend at first. And then once you get the trading established and once you get the business framework established, if you need to go to, let's say, an S corporation, you can make that election later on. So I tell my clients, I say, listen, let's set up this multi-member LLC, this partnership first. Get the basics going, and once you get the basics going, then if we see the need to go to an S corporation, we file that election and we make it an S corporation. Still an LLC, but we can change how it's being taxed. So by the way, the partners can still claim a home office deduction on the personal tax return. And so when you get that home office deduction, by the way, that's a very important deduction. If you have an office that's under 300 square feet or under, the IRS, just if you do the simplified method, you get $5 a square foot. So if I've got an office of 200 square feet, the IRS automatically give me a $1,000 deduction. Now, most people, we take the percentage, the square footage of their office, divide it by the square footage of their house or their living area, and come up with a percentage, and then we can deduct a percentage of rent if you rent, or mortgage interest, real estate taxes, insurance, utilities, internet, all that stuff. So we can find different deductions to help you save some money. Okay, so that's what we recommend. And we'll get to the questions here in a little bit. Now, another way to save money, to protect your cash flow, is to make the mark-to-market election. Now, the mark-to-market election is often confused with trader tax status. They are not the same thing. Now, as an individual, you have to have trader tax status before you can get mark-to-market. But mark-to-market is a way of accounting for your gains and losses, whereas trader tax status has to do with deducting expenses on your return. Now, what mark-to-market does in a nutshell, it takes the beginning value of your portfolio and the ending value of your portfolio and subtracts them. And you find out an absolute gain or an absolute loss, and that becomes your gain or loss for your tax return. None of this wash sale stuff. Mark-to-market election actually allows you to get rid of the wash sales. Now, another thing it does is the gains and losses become ordinary gains or losses. They're no longer capital gains. Now, I realize that's not a very important distinction for a lot of people, but it's actually a huge one for traders, because what that allows is if you have a loss under capital gains, you only get $3,000 in the year. So if you get a net loss, let's say I lost $10,000 in my account for the year altogether. After all my gains and losses are added together, I lost a total of $10,000. I can only deduct $3,000 as a normal trader, period. And I have to carry the rest of it forward. But with mark-to-market, I could deduct all $10,000 of it in that year. Now, what does that mean as far as cash flow? Well, by deducting all $10,000 of it in a year, I get my tax refund higher, and so I can take the money I get back for the refund, and then I can put it back into investing now. I can make that money grow, and that's what's so important about this. And I mentioned a little bit ago, the trading account's also no longer subject to the wash sale rules, increasing cash flow. Now, some of you are familiar with wash sales, and this primarily pertains to those of you trading stocks and options. What happens are wash sales, it's a really tricky subject, these wash sales, but the idea is the IRS, if you buy something within 30 days of selling it at a loss, the IRS will not let you take the loss. And wash sales can accumulate through the year, and then they get passed on to the next year. So if I have $15,000 in wash sales, let's say for 2021, I can't deduct those in 2021, even though they were legitimate losses. So I have to carry those forward into 2022. Why is that important? Well, that's $15,000 in losses that I can't take in 2021. I can't get any money back for it. So I'm not protecting my cash flow. So the mark-to-market election will help you protect your cash flow and actually get the money now when a loss or is actually realized. So it can lower your gains, or it can actually, it gives a right perspective of what you did in your trading accounts. Let's put it that way. And so, like I mentioned, this election is best for those trading stocks and options. Okay. Now, let me read a disclaimer here. The paths recommended here are general recommendations and may not fit your particular situation and goals. And I say that because everybody's situation is different. There is no pattern. There is no boilerplate for everybody. We have to look at what you have. And we've got to be able to see what's best for you. A few times I've recommended people go to C Corps, and there's very few, quite frankly, but there are a few times when I've recommended that. Some people I recommend go ahead and go straight to an S Corp and just go that route. But generally, I want my clients to go through the multi-member LLC first. Because for most people that seems to work out best, and we can get everything operating at its optimal level, and then we can start adding components to their business. Now, let me talk about traders accounting for a little bit, and then we'll open it up to questions here after the next slide. So traders accounting, what we do is, first of all, we provide entity creation and maintenance. So we can help you set up an LLC in any state of the United States. We can help you get that set up. We can help you maintain it. We've got a registered agent in every state of the United States, and we can get that help. Now, quite frankly, most often you want to set up an LLC in the state in which you live. And the reason for that, if you don't, and the state where you live catches you running that LLC in your state, then you're going to end up paying for two LLCs. Not a good idea. But we can help you do all that stuff and get that together. We also do bookkeeping for trading businesses, mark-to-market or not. For someone that trades, let's say, Forex, or for somebody that trades futures, we can do bookkeeping for them just as much as we can for stock and options traders who have mark-to-market. We have a full-time bookkeeper that all she does is keep the books for a lot of different trading companies, and when she's done, she keeps those books very clean and she passes them off to us on the tax side, where we just prepare the taxes straight from them because they're kept nice and neat. And then, of course, we have income tax preparation for all types of returns. We do. Just today I did a individual return. I did a partnership return. I worked on an S corporation extension. I did a C corp the other day. We do them all. So whatever we decide, or whatever you decide is your best entity, we can handle those tax returns for you. And finally, we do tax and entity consulting. If you just need somebody to talk to and find out if you're going down the right path, we can do that as well. We can help you with a tax problem. We can help with talking to you and answering questions about entities. And so we can do all of that. So the last slide here, very important word at the top is free. Everybody likes free stuff. Raven Johnson is our entity formation specialist. She has been doing this for many, many years. And she will give you a free 30-minute consultation to find your best options. Because as I mentioned, no plan is exactly right for everybody. We have to tailor things to match your needs and what your goals are. You can also call us, as I mentioned, at 1-800-938-9513. However, the link that I placed into the chat, I'm going to put that back in there again right now. If you go to that link, there is a free ebook there. It's about 14 pages, I believe, and it's got information, a lot of information about what I was discussing tonight. It has information about the entities. It has information about which entity, the pros and cons of each entity. And so I would encourage you strongly, that's a free book. Certainly it helps in your knowledge. I encourage you greatly to get information. I had a client yesterday I was talking to, and we were talking to about the mark-to-market election, and I asked, well, are you going to make the mark-to-market election? And she said, I don't know yet. I said, that's fine. Don't let me pressure you into that. I want you to find out information. I want you to know what you're getting into. And the same thing with you all. I want you guys to know exactly what's going on. I want you to know what you're getting into before you do it. And so certainly, please go to that link and get that free ebook and sign up for an appointment if you want to, and we will be happy to help you in any way that we can. Okay, now we're going to move on to questions here. I know the chat has been kind of buzzing here. And said the link tried, it failed to connect. Interesting. That's the link they gave me. So I apologize for that. Try it again with a different browser, because sometimes the browser does make a difference. I'm going to back up in the chat here and just kind of cover a few questions here. Let's see here. RKR says, if you already have an S-Corp consulting business, can you use trading as well? Generally speaking, yes. It depends on how your operating agreement is set up. Most operating agreements are set up so that they're flexible and will allow multiple things. Now, I know some of you are starting to think, well, I can have a trading business and I can have maybe rental real estate, or I could do consulting or something like that. Be very careful. And what I tell people, and the example I use, think about maybe putting a trading business and rental real estate together. How likely is it that a renter will sue? I think it's fairly high compared to other things. Trading, you're not going to get sued. I mean, facing it's almost, risk is almost zero as far as legal liability. But with rental real estate, it's fairly high. Do you want a renter suing you? They can take the property and then get into your trading assets. You've got to think about the legal liability. What I suggest to clients is, if you've got a low liability risk, then you can put those revenue streams into the same business. You know, trading's low revenue. Maybe consulting might be low risk as well as far as legal liability. You could put those together. But things that are higher risk, I would not risk my trading assets for. So make sure you keep those separate. Somebody, FT, asked about how do you start a multi-member LLC if you're single. I did mention that, but I want to point that out because it's very important. It's a question I get all the time, that we can form a family trust. You can get a parent, you can get a sibling, you can just get a friend to be a 1% owner, or if worst case scenario, we can set up two LLCs, a single member LLC and a multi-member LLC, and then the single member LLC can be the second partner. And the single member LLC, it really does nothing. It allows you to be that second partner. So that's one way to do it. There's other ways to do that, but it can be done. Do that. Current administration is considering a standard fair tax of 50% for corporations. Would that be on top of capital gains? Corporations are C corporations. We're talking about our world to themselves. Right now, the C corporation rate is a flat 21%, which sounds very attractive. But when you talk about finding the tax, there is no long-term capital gains. There's no short-term capital gains. Everything is lumped together for a C corp. Now, there is a dividend exclusion. So it doesn't matter whether it's capital gains or if it's earned income or interest income or what it is, it's going to get taxed. And this is something that I've actually been warning my clients about, because the 21% tax rate for C corporations sounds very attractive. But I said, as soon as the politicians get their hands on it again, that tax rate's going up. And right now, even you've got, with C Corp, you've got a accumulated earnings tax that most people don't realize, that you're going to get taxed at 21%, and then once you achieve $250,000 of accumulated earnings, whatever's over that then gets taxed at another 20%. So anything over $250,000 is going to get taxed at 41%. Most people don't realize that. And so I would steer clear of the C corporation unless you absolutely have to. If H says, is LLC required for day traders only? Can they do mark-to-market only and file gains and losses on Form 4797? An LLC is not required at all. I mean, you can deduct, you have to be able to deduct your expenses through trader tax status on your Schedule C. And and of course, if you got mark-to-market election as well, then you would use the 47.97 for your gains and losses. That can be done as an individual. But remember, you have to have trader tax status first. You got to meet those qualifications, and then deducting those expenses puts a target on your back. So really, it's something that you really want to, if you want to take the chance on or not. RKR says, when would you get back wash sale losses? Is not mark to market, or are they different? Okay, wash sale losses are deferred until the next year at least, and possibly 2 or 3 years down the road. So it's possible you get, like if you had wash sales in 2021, you probably get those back in 2022. But there is a way that if you keep trading things in 2022, it's possible those losses could get deferred into 2023. Mark to market, if you have a loss in 2021, you take it in 2021, period. What about using a trading bot, and what about trading cryptocurrency? Oh, good questions. Trading bots have come under a lot of scrutiny, or a little bit of scrutiny lately, and the IRS doesn't like them. And so if you're an individual trader using a trading bot, they're not going to let you have trader tax status, period, because that's kind of, they view it as cheating the system. So if you're going to use bots to do your trading, I would strongly recommend you either get this thing off of your personal tax return into like a multi-member LLC or even an S corporation, because the IRS is going to scrutinize you if you use those bots as an individual. Cryptocurrency, you could do mark to market on cryptocurrency, but it only, since there's no wash sales with cryptocurrency, there is no protection from wash sales there. So the only benefit to market is actually on the downside. You would get rid of the $3,000 loss limitation for capital gains or losses. So instead of that, it would become an ordinary loss, and you could deduct the whole thing in a year. That's the only benefit of mark to market for cryptocurrency. Do I have to create a business? Can I take some benefits you mentioned just as an individual? Yes. It's just as taking them as an individual, you are at a higher risk of an audit, and so if it's like rolling the dice. I told somebody today that you can do it as an individual, but it's like shooting craps. Eventually, snake eyes is going to come up, and there's reasons for that I'm not going to go into right now. But the IRS really looks at those Schedule Cs, and quite frankly, one of the things they look at is on a Schedule C, they want to see profit after 3 years. And if you're a trader, you never show profit because you've got expenses on the Schedule C, but your income is on Schedule D. So your Schedule C is always going to be negative. And so that becomes a kind of a red flag after a while. Somebody mentioned, yeah, this is mostly for day traders. 700 day trades is a lot for some people. For other people, I talked to somebody today, his wife alone has 1,000 trades this year, and he's trading a lot more than that. So there's people that do this quite actively, and so they trade. Let's see here, links. Roth IRA, yes. Well, okay, no, you don't want to put your Roth IRA in your LLC. The Roth IRAs are basically self-contained. So mark-to-market trader tax status does not apply to a Roth IRA at all. You want to keep that separate. Now you can trade, obviously, you can do a self-directed Roth IRA, and there are no wash sales there. There aren't any capital gains or anything because there's no tax until you start pulling the money. Well, even when you pull the money out because it grows tax-free. So, you know, leave the Roths out of all of that. Let's see. How does it work if you're trading as a contractor for a trading prop firm and profits are split? Oh, great question. Some of you may be considering this. If you trade as a contractor, the income gets characterized as now as non-employee compensation. Now, that may not mean anything. Let me break that down. As an investor, when you earn capital gains or ordinary gains if you're under mark to market, those are not subject to self-employment tax at all, just subject to income tax. However, when this gets characterized as you're getting this money from this company as a contractor, that's all of a sudden becomes earned income, and that's now subject to self-employment tax. So now you're looking at an additional 15.3% just in self-employment tax in addition to the income tax. So what I would do in that case, possibly, and I don't know the exact circumstances, but if you're going to be a contractor for a trading firm, and you're going to be subject to self-employment tax, I would suggest going maybe into an S-Corp and then paying yourself a salary and pay some of your self-employment tax, your FICA, Social Security and that, doing your payroll thing, but we can minimize the amount of self-employment tax. Otherwise, if you do it through a multi-member LLC, a single-member LLC, or even a sole proprietorship, you're going to get nailed self-employment tax. Let's see. You said something about deducting trading research, wondering how. Not deducting that, but the hours that you have to put in order to get trader tax status. You need to be working 4 to 6 hours a day. And that's trading, or part of that time you can spend is doing research. So the IRS would count that for the qualifications. Let's see here. I was reading through this. Yes, if you have a small business and you're not doing anything. Yeah, I would talk to somebody else today that they have a very small trading business and they have very few expenses, and they decided not to report their expenses on a Schedule C because they didn't want to get open to an audit. So I can certainly understand that. Requirements for mark-to-market. Oh, yes. Investors, okay, mark-to-market is an election that you have to make on your tax return. I'm glad you asked this question, Ryan Colburn. In order to get mark-to-market, you have to make an election. You have to think a year ahead. Right now, it's too late to get the mark-to-market election for 2021. Can't be done. And we're running out of time for 2022. As an individual, you have to make the mark-to-market election by April 15th. And that's done by just filing a simple statement with your tax return, your 1040, by April 15th, or if you file an extension, the election has to go with your extension. Now the wording for the election, you just type it up, the wording you can find in publication 550, and you just type it up on a simple document and attach it to your tax return. It's really simple to do, but it has to be done by April 15th. And this is one of those things the IRS has recently changed. Some of you may be familiar with Form 3115. The IRS has recently changed that. All you have to do is file an election, but it has to be done by April 15th. S corporations and partnerships have to do it by March 15th. So we are really closing in on the date on that. What about the bot if you're not the bot developer? Implies a lot of research and coding time. Yes, you can deduct your expenses for that. If you're going to use a bot, if you're a developer, that's a whole different ball game. Not as a trader, unless you're using it also as trading. But then you've got a business there, and if you're selling the bot, then you've got income that could be subject to self-employment tax. So that'd be something that we would want to sit down and talk to you about. How do you prove your research hours for the IRS? That would be something you probably want to keep a log of. That would be the best way to do it, frankly. I know it's a pain in the neck, but if you're going to go after trader tax status, you don't want to lose it. Because as an individual, if you lose trader tax status, you also lose mark-to-market, period. Do you make mark-to-market every year, though qualified earlier? And the answer is no. Once you make the election, it's permanent until you decide to revoke it. And so we did a couple revocations this year already. But I don't suggest that you get into year by year you're changing it. You got mark-to-market one year, not mark-to-market the next year. Don't do that, or you're going to have the IRS visiting you. Good presentation, but the devil's in the details in record keeping. Both items can be problematic for non-accounting type. Absolutely. And that's why our business exists, frankly. We help take care of some of those details. The devil is in the details. And some of you, you guys are specialized, and some of you are really good at trading. And that's what you do, and you don't do accounting. We do accounting well, and I used to trade. I don't anymore, and I'm not sure I could trade in this market anyway, the way it's going. All right, so that would be no different than home office. So yeah, I would encourage you, those of you who have a home office, to check that deduction out, because that can save you some money in the long run. Okay, it looks like I've covered all the questions. I hope I didn't miss anything. So I am going to turn this back over to Stephen, or whoever else is going there, unless you guys have any more questions. Okay.
All right, very good, Jerry. That's a lot of good information. So if you have questions, get with Jerry. I mean, he's got the experience. So very good. We appreciate you showing up tonight and giving us this information.
Well, I appreciate you guys having me.
Okay, great. All right, everybody. Have a good evening. This is the information that will save you tons of money, making sure your taxes are set up correctly. That'll be it. We'll see you bright and early in the chat rooms tomorrow. We'll see you then.